The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Glenn in Massachusetts. Hey, Glenn, what's going on?
You know what is good for us is Tom O'Brien providing an unbiased source of information for us investors. You don't have an agenda. It's just to cut through everything and to give us the facts. I want to thank you.
Well, I appreciate it, man.
And now, here's Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 2 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day out there. Safe day. Let's make it a great weekend, folks. It's a TGIF Friday. Let's take a look at one of our 4 agreements. Disconcern the truth. The problem with making assumptions is that we believe that they are the truth. We make an assumption, we misunderstand, we take it personally, then we react by sending emotional poison with our word. This creates a what? This creates a whole big drama for nothing. Get rid of the drama out of your life, folks. Market-wise, let's take a look at it out here. We had the Dow up 61, Nasdaq up 43, S&P's up 13. Gold contract down $7.10, trading at $1,409 an ounce. Silver up 12 cents at $33.29. Platinum up $23 at $1,805 an ounce. Copper up 12 pennies at $4.45 a pound. Bonds up 11 ticks at 120.128. Dollar index up 15 ticks at 77.25. Euro 137. Yen 81.65. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You have $13. We started out on the 18th of February. We go from $13.44. We come downtown to $12.94. You go up today with 13. We went up on $945 million going against $1.3 billion. This is a B to a C, folks, of an ABC structure down. That's on your SPX. We go over to the SPY, and you take a look at it. What you have is this. We come off the highs. First off, we made a high up there on the 18th. We did that with 130 million shares. You come off that 130 with 233 on the way down, 277 on the way down, and 260. Today we go up with $1.33. Dow Industrial, same type of setup in the Dow. What you have with the Dow, Dow came off those highs. Highs we're talking about, they came off was 12,391. Gets down to the 11,983 and pops up today with dramatically lighter volume. The composite, NASDAQ composite, same setup in the composite. In fact, the same setup as across many sectors out here today, folks. So inside the composite, we made a high on the 18th. 2840. We come off that high with 2.495 billion. Today you bounce with 1.8 billion. The Qs, 4 Qs. What do we do with the 4 Qs? 4 Qs today go up on 52 million after going down on 92 million, 97 million, and 98 million. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. We go over to the bonds. Now, this is really going to get interesting with the 30-year, and this is why. 30-year has been trying to push into the 122.05 level. It got the juice. It has the juice on the daily. It has the juice on the weekly, particularly on the weekly. So what you had out here is this. We did 348,000 contracts today. Yesterday you did 697. On a weekly basis, you're pushing in, and you're pushing in there with a huge amount of contracts, much higher last time we were up here. That we're talking on a weekly basis, 2.2 million contracts versus 1.67. That's saying it's not only going to get in it. I suspect what you're going to see this long bond, we're going to be running up to about 128. That's a big number, folks, and we'll see what's going to make that little baby run up to those levels. But that's the way it's set up right now. Gold. We go over and we take a look at the gold contract. What we had out here today, a really flat day in gold. The highs were 1,412. The lows were 1,400. It's closed out the week at 1,409. Now, we did 111,000 contracts out here today. That little baby needs about 250,000 contracts to get up and eat the rest of that supply line that is out there from November 9th. Yesterday we did 187,000. When we had come down on November 9th, as well as December 7th, and as well as January 4th, that was monster volume at those levels. We go take a look at the GLD, and it's a little bit easier watching the correlation of the GLD. What you have with the GLD is that yesterday we pushed into highs with 18 million versus 26 million versus 26 million and versus 39 million going all the way back to November 9th. We got to take a look at the energy market. Well, we'll go to oil first. Oil out here today, flat market in oil, up 92 cents. This is what we had with oil. Oil spiked yesterday, got to the 103 level, overnight 103.41. Gave it up. What you had out here today is that we did 284,000 contracts going into the 507,000 from yesterday. Now, when we do turn around, we put this on a weekly basis. What you have out here, it's still above the higher range, meaning the 94.89. So that sets up that, bottom line is that you could get the 103.41 tested one more time, or at least tested. We go to the XLE. Now, the XLE, folks, that's the integrated sector, energy sector. The low's 48. The high is 78. This little baby right here, what you have is this. We were up $1.22 today. That is trying to get into the 78.37 level. That 78.37 level was the high of the 23rd. So we'll see how it trying to gets into that level. We put this on a weekly basis, and what we have with the weekly basis is that it's above the highs of last week, which is 77.20, and it does have some juice up there. We break that down. We come back inside the XOM, which is ExxonMobil. So we come back inside the ExxonMobil. It hit some highs out there this week. Bottom line, those highs are going to be at least tested. That high out there is the 88.23 area. Now, folks, let's go over to our man, Mr. Ed Young at MF Global. You want to get involved in financial futures, the commodity market, the Forex market, you can give Ed a call at 888-369-0670. And don't forget, folks, right here, each and every Thursday, live from the Chicago Merc, 11 a.m. Eastern Time. Ed has his own program. You can call, you can talk to him, 11 to 12 Eastern Time. Ed Young, what's going on?
Hey, Tom, how's it going?
Going great. Ready for a good weekend?
Yes, I am. We're hoping that this last snowstorm that we just got last night dumped another half a foot on us.
Oh, my God.
The last one we see for a while. We're definitely getting tired of that.
I bet. Well, March 17th is right around the corner. So after that, there's only about one other big one, right?
Yep.
On
absolutely.
Easter.
So we're hoping, but I think one of the things I was trying to mention in a couple of shows this week, Tom, is when the corn prices fell hard with everything else, when there was kind of a risk off.
Yes.
That the risk would be that would be viewed as a bargain by those that need to come in and fill demands, and that's what the market was responding to with the limit up moves today in the corn. At this time of the year, if we do 1 million tons in a week of exports, that's a really good pace. Matter of fact, that's abnormally high. That's probably about 67% above the normal pace for this time of the year.
Okay.
This week we did 1.5 million because of the price drop that we had, which was way above expectations. But the problem is this is like the fourth week in a row we've run at this abnormal pace. And I think the market's even looking at a scarier fact, Tom, is, we expect Russia and China and areas that are dependent on Australian or Chinese exports. What we didn't expect was Mexico to be such a big buyer, but they had damage from freeze and stuff as well, and it just doesn't bode well for corn prices to be able to stay. I mean, to me, Tom, it looks like they need to go significantly higher to ration off demand. They're just going to have to. We just don't have enough.
And the demand, now, are they eating corn? Are they just basically using it for ethanol, or are they putting it in other products?
Well,
All
the
the
rest
above.
of the world is eating corn.
Okay.
In the U.S., we use more to make ethanol than we do everything else.
Okay.
Feed grain to animals, everything else. That is a problem. But when gasoline and oil are going up like they are now, that's only increasing the demand for ethanol. But Tom, your question on a broader basis is it's exports that are driving this right now.
Sure.
They're getting it to eat it. But remember what I said a couple of shows ago is what I'm afraid is going to happen, like in the 1980s when we had the gasoline shortages.
Yes.
Not just filling your gas tank, it's going, shoot, I don't want to get cut short. Let's get some extra.
Right.
And that's where the unknown demand factor is at, and that's what really can skew things.
Yeah, and that totally makes sense. I mean, if you are out of something, if you think you want to be out of something, if you have some extra bread, it makes sense to buy it. If you're happy, that the risk that it could go higher, even though you're paying a high price, right? It's like, okay, hold it. If it goes lower, I still need it. It's not the end of the world, but if it goes higher, it's going to help me dramatically.
But I think it's even more dramatic than that right now, Tom, in the background of world events. Nobody wants to be the next Hosni Mubarak. Nobody wants to be the unrest. And again, it's hard for us in the United States because we have such high incomes and we only spend 7% of our income on food. The rest of the world, they spend 70 or 80% of their income on food. And our middlemen have been absorbing it, and it hasn't been passing through to us as much as it is in the rest of the world because they eat lower on the chain. And I would say it's even worse than that because nobody wants, they don't want their public unsettled. Let's get some. Let's make sure we're not driving the price up through shortages. So it's going to be interesting to see until the new crop starts to get in the ground, Tom, just how high corn can go. And I know this probably sounds bold, but I think it's got to go to $10.
And so that would be
$3 higher.
Yeah, another 50% move where it already has moved almost 50%, right?
We're almost at the historic highs. I think it's got to go that much higher. Otherwise, it's just it's going to run out, and that's just not going to happen. If it does, Tom, what will happen is if you look on your wheat charts and you see when wheat moved $2 in the last 15 minutes just before delivery, futures contracts, if you hold them to the end, you have to take delivery or make delivery. And if you're short that corn, and in other words, you owe delivery, you
Right.
have to make delivery on it. You got to pay whatever it costs to get it.
Yeah, no, I'm with you. Until it, yeah, I know.
So if you wait till the end and play chicken and see who blinks first, you could pay dearly like some people did in cotton.
Yeah, no. There's no doubt about that, man. Listen, folks, Ed's phone number is 888-369-0670. You want to get involved in financial futures, the commodity market, the Forex market, give him a call. Now, you can also come over to our website, folks, at TFNN. On the right-hand side, you can see the MF Global banner. Hit that banner, give us your name, give us your email. Ed will set you up in a private target trading room. Have a great weekend, safe weekend, Ed. Look forward to speaking to you next week.
Thanks, Tom.
Coming right back, folks.
Are you looking for some extra cash to help pay off some of your bills? Let